So you've got a life insurance policy in Georgia. You think you've done the right thing, that you've secured your family's future. But what if that promise isn't as solid as you think? In this explainer, we're going to dig in and find out if that payout is really guaranteed. You pay those premiums every month, and you trust that you've built this safety net for your loved ones. But here's the thing you got to remember. A life insurance policy is a legal contract. And just like any contract, there can be hidden clauses, little conditions that could lead to a claim getting denied, leaving your family with absolutely nothing. And for folks in Georgia, things can get really tricky, especially when drugs are involved. We're going to walk through the specific rules for 2025 so you can see exactly how this could affect a payout, and more importantly, make sure your family is actually protected. Okay, so let's talk about the very beginning of a new life insurance policy. There's this period where it's under a microscope. This initial window, the first 2 years, is when the insurance company really has all the power to investigate a claim. 2 years. You gotta burn this number into your brain. It's what's known as the contestability period. This is when your policy is at its most vulnerable, the time it can be challenged by the insurer. So, what does this all mean? Well, it all comes down to this one phrase: material misrepresentation. Sounds kind of technical, right? But all it really means is that you left something important off your application. Maybe a history of substance use, a medical condition you didn't mention, or even a risky hobby. And this is the kicker, you guys. Even if the thing you left out has nothing to do with why someone passed away, the insurer can still use it to completely void the policy within those first 2 years. It just makes being brutally honest on your application absolutely critical. All right, so let's say you make it past those first 2 years. What happens then? Well, at that point, the whole game shifts. The focus isn't so much on the application anymore, but on the specific cause of death. Let's look at 3 big scenarios where drugs might be involved. This is a tough one. In the tragic case of an overdose from illegal drugs, we're talking heroin, fentanyl, that sort of thing, the payout is a huge question mark. See, most policies have what's called an illegal acts exclusion, and that gives the insurance company a pretty clear runway to investigate and very possibly deny the claim. And this is a huge but, an accidental overdose on prescribed medication, that's a whole different ballgame. It's often covered, especially when you think about retirees who are juggling multiple prescriptions from their doctor. Now, the red flag for the insurer would be a toxicology report showing crazy high levels of a drug or a mix of drugs that were never prescribed together. And look at that. We're right about to that magic 2-year window. Almost every single policy out there has a suicide clause. If an overdose is ruled a suicide within those first 24 months, the claim is almost certainly going to be denied. Plain and simple. After that 2-year mark, though, it's typically paid out. Okay, something else you absolutely have to know is that not all life insurance is the same. Not by a long shot. The policy you get through your job, it plays by a totally different set of rules than a policy you go out and buy for yourself. You know that insurance you get through work? It's a great perk, for sure. The underwriting, that's the risk assessment process, is way less strict, and you usually don't even need a medical exam. But here's the catch. It's tied to your job. The second you leave, that coverage just poof, it's gone. And that could leave your family in a really tough spot. That's a real question for a lot of people. I mean, what do you do? What if something in your past health history, maybe even substance use, makes it really hard to pass that full medical exam for your own individual policy? Well, thankfully, there is another option out there that's designed to be a kind of safety net. It's called a guaranteed issue policy. And just like the name says, you're guaranteed to get it. No health questions, no exam, you can't be turned down. But there is a trade-off. It has something called a graded benefit. Basically, if death happens in the first 2 years, it usually only pays back the premiums you paid. It's really a tool for seniors or people with serious health issues who just want to make sure final expenses, like a funeral, are covered. Okay, wow, that's a lot of information, right? So what do we do with all this? How do you take all these rules and turn them into a real action plan to make sure that promise to your family is secure? Look, when it comes right down to it, your best defense is just being smart and proactive. It really boils down to being radically honest on your application, always remembering that 2-year investigation window, and having a personal policy that you control, not your job. Every single one of these steps is about taking the guesswork out of it and making sure you know the exact rules of the game.
So here's what I want you to do. Take a few minutes, go find your policy, look over that original application you filled out, think about it. It's a tiny investment of your time, but it could make all the difference for the people who are counting on you. And it'll ensure the promise you made is one that will absolutely be kept.